June 23rd, 2025. We have a large expanding triangle, as you can see. I thought coming into the day it was a little bit more of, a contracting triangle if you look at it, this way and this. But obviously, as the day went on, it turned into an expanding triangle. It's a bit easier seen on the 15-minute chart that I'm showing here. So this is today's price action, and you can see we have this and that. So it is an expanding triangle. As far as today, bar one, a bear bar, but a large tail in the middle of a trading range. A big reversal on two. You could theoretically buy the close of two. It's a big enough bar, but you might be buying kind of high in the trading range. It's not really breaking out of anything. Bars are important in how they look, but what they break out of and if they break out is also extremely important. And I would say a lot more important. Just looking at how the bar looks, it means something, but you have to know more than just that in order to be successful. Bar six, this is a pretty good 3-bar micro channel. It actually ends up being 6 bars. We haven't gone below anything yet. So when I see the close of bar six, I think that's a pretty strong buy. However, I do not trade before bar seven, so I did not buy at the close of bar six. But I think it's a very reasonable thing to do. Especially, you have 1, 2, 3, 4, 5, 6-bar micro channel. By this point, you have an 8-bar micro channel. You get this many bars in a row, odds are there's going to be buyers below. So it was certainly reasonable to buy below bar 8 and look for maybe an average bar range to the upside or exit at the new high. Odds are selling below 8. Just think about it, the logic of it. Forget the rest of this. If I sell, didn't really do what I wanted to, but if I sell below bar 8, what are the odds that I'm going to get a couple bar ranges down, maybe below 6 before I get back above 8? Not very good. So odds are it's a good buy below 8. We have 3 legs down. It's possibly a pullback. 1, pullback 2, pullback 3. You can see if you were long for any reason, you had a 5-bar micro channel. 1, 2, 3, 4, 5. So odds are the first reversal up is going to fail. So 15 is more of a bar. 15 and the tail on 16 is looking to bail bulls out. Bulls who were buying for any reason and then are disappointed in the 4-bar micro channel. 15 and 16 is giving them a chance to exit. So I would not buy above 15. I would wait because you're getting a 5-bar micro channel. Odds are we're going to get below 15 for at least one more leg down and below the 9 low, since that's potentially the start of the channel. 16, 17, 18 is a 3-bar micro channel, but it's leg 3. These two situations right here and right here are the two spots where the 3-bar micro channel struggles the most. Those two spots are late legs and against, parabolic wedges and things of that nature. I am doing a whole study on, the success rate of the 3-bar micro channel against parabolic wedges and tight channels. I got the numbers done this weekend, but I need to do more before I'm going to make a video on it at some point. But I have the numbers, but I want to turn it into a slideshow and something that's more presentable. And I want to, I need to fully understand it, before I make a video on it. So I haven't done that yet. I might do that, maybe this week or next week. But I really, like I said, the late legs are where it struggles, and against tight channels are where it struggles. And so if you can get a deep understanding of those two things, then you can probably do very well. And that's one of the reasons why I'm really going to be taking my time with that. So bar 18, a 3-bar micro channel, but a late leg. I'm not selling the close of 18. What I did do was I sold above 18, basically taking a chance that 19 would sell back off, and I exited above 19. So I sold above 18 and exited above 19, and I lost 2.5, 3 points. Rather than selling and scaling in and then having to exit because it's a late leg, you'd lose like 17 or 18 points. So when I'm saying, in late legs, if I'm going to take it, I'm going to trade the pullback and then be really quick to get out to reduce my risk, since I have to reduce my risk because it's a late leg and the probability is going to be lower in a late leg. So it's not really that great to be taking trades with large risk and low reward in late legs. It's just not that good. Again, tight channel down, or it is a parabolic wedge. All parabolic wedges are tight channels, but not necessarily all tight channels are parabolic wedges. So this is a parabolic wedge to the downside. I did buy 21. I thought this was fine. I usually am trying not to trade against parabolic wedges unless it is with the regime of the market. So I found that I believe around 80% of trades that are against or that have a parabolic wedge preceding it are against the market regime. So that was why. And I noticed of those trades that the win rate dropped to 65% instead of 75%. However, on the ones with the regime, the win rate stayed 75%. So it was reasonable to take this trade, and I did take it. 23 is not enough to get me out of the trade. I waited for 24. Once I got 24, I looked for a half an hour, and 25 got exactly half an hour. You can see basically to the tick. And so I got out at basically the exact high tick of 25 right here. It wasn't quite break even. It was a small loss. So I took a tiny loss here and a small loss here. This is fine, though. I'm okay with this. I thought odds were with how strong this was. Again, even looking at the 15-minute chart, we were right here at this point. So this is a 3-bar micro channel, and it should get some sort of second leg. I was prepared to scale into that second leg, presuming that we would get back above this high. Obviously, we did much, much later in the day. But I was really fine with both of those trades. I didn't take 24 just because I just wanted to sit on the sidelines at this point. And like I said, I had just gotten out of trade. So 24 is a good trade, though, if you sold it. I think that's really good. I did take 36. I sold the close of 36. It's a breakout below a bear channel, but the channel is relatively tight, and it got 1R. You have to be careful down here because we're around 6,000. So that's obviously a pretty big magnet. And we tried to test it, you can see yesterday, but we were never quite able to. So I thought, when we started to sell off, I thought 6,000 was going to be the magnet. So I sold, and my 1R target was about 6,000, and I ended up taking profits there. 38, 39, and 40. So the thing to understand is this is too deep of a pullback for this to be a meaningful breakout and turn into a bear trend. So when you see this, what are the bears hoping 38, 39, and 40 is? Yes, they're hoping it's a pullback, but be more detailed, right? You have to think a little bit more about it. What are they hoping is happening right now in 38 and 39 and 40? They're hoping that it's the beginning of the channel phase. So they're hoping this is a spike, and it's a new breakout, it's fresh, a pullback, and then they want to channel down. The bulls are hoping this pullback is deep enough that we have converted into a trading range. So essentially, if you're buying here, you're saying this is a trading range, we're not in a bear channel. If you're selling, you're saying this is a bear channel, we're not in a trading range. And so you have to think about those two things. For me, I'm not willing to buy the close of 40 because this is just too strong. Even though this is really strong, this is strong enough that it's going to pull back. So I bought the 40 low, and I bought more at the 38 high, and then I got the full symmetrical second leg target. So I bought here, and then I exited up here during 45. I then, when you get this, again, we're in a trading range now. I think once you got 40, you see we're testing the 34 low, the swing point. So that's what happens in trading ranges. I thought this was a trading range once we tested the 34 low. Really, once we get 39, it's unlikely that this is going to be a big bear channel. So that was why I was willing to buy. But again, this is too strong. You can just buy the close and scale in. That's totally fine. There's nothing wrong with that. But I just decided to buy lower instead. If 43 had been a big bear bar as well, I probably would have gotten out because at that point, we're more likely to be in a bear channel. Maybe not more likely, but it's too difficult of a pullback to keep trading. So I bought, and I bought more, and then I got out up here. I rebought on the close of 45. 46 is really good immediate follow through. It's volatility expansion. 46 expands from 45. You can see 45 closes around its midpoint and is a 9.5 point bar. This bar is slightly larger and it closed stronger. So volatility expansion. I was waiting during 47 as it started rallying. I tried to get filled on a limit order. I had already bought the close, but I tried to buy more, and it didn't let me in to buy more. So I ended up just getting the 1R target with my buy the close position, even though I tried to get filled for more, and I did not. And I ended up getting out up here. So I ended up having a really good day today. And again, it always starts out, you're with this sort of thing, your losses are going to be much bigger than your wins. But as you get better and better at managing the trades, you take very few full losses. These full 150% losses, I used to take like 3 a week. And I think I'm probably going to be and I think I've had 1 this month, and we're on the 23rd. So I'm getting better and better at getting out of them. And I'll probably, maybe I'll have 1 more this month, maybe. And I'll probably have 1 next month, but I've limited them down to about once a month now. So I'm doing a pretty good job with that. And my wins are becoming bigger than my losses, and my probability is not dropping all that much. So we'll see how it keeps going. But again, like I said, I've tested all the stuff, and so in days like this, it makes sense that I made money. I did everything the way that I was supposed to do it. I don't really necessarily need to be trading this late leg, but I've kind of just I've just sometimes you're just going to trade a late leg. That's just how it goes. So if I'm going to trade a late leg, sorry, I had to step away for a few minutes there. Just wrote a note to remind myself what I was talking about, but I was just going over really quickly here. Again, it's okay to buy and scale in, but over time, you just work on entry optimization. When you know this is not going to get a V bottom, there's going to be some sort of at least pullback from this sell off, and so you can look to buy the pullback or stuff like that. Anyways, just gonna go over the daily chart real quick. Still, the bull channel is intact. I am going to turn on extended hours here. Sorry, this is taking a second. Still an intact bull channel, so okay to be long on the daily chart, but this is I think this is going to evolve into a trading range. If it just keeps channeling up and we get a strong breakout above the high, then fine, it's not a trading range. But to me, until further notice, this is a channel, and channels are legs in trading ranges. Until we break out strongly, what changes my mind, right? If tomorrow looks like this and the day after is strong as well, and we get a couple strong bull bars up to this area, then fine. It's a bull trend again. And the market's obviously in an infinite bull trend. But anyways, the weekly chart, we did trigger below last week's low, which was a bull bar. We might potentially have to go above last week's high, and there could be sellers up there, and we start to go sideways. But again, the strong breakout to the upside can absolutely change my mind. We could have to. It's very possible we're going to go test the all-time high. I'm not, but I believe that is 61.63. Okay, 61.66.5 is the all-time high. We may have to go test that. Do we go back down? I still think. Oh, that's the yearly. Still think we have to test this April high. I'd be surprised if we didn't. But it's obviously it's the monthly chart, right? So it's always in a bull trend. But I would be there's so much. It went down so far. Yes, it got bought up, but it went down far enough that I would just be surprised if we didn't at least do the minimum for the bears and get back to this April high. But we'll see how it goes. All right, that's it for the day.